AMD. You are looking at a company in AMD that is transforming its entire business model right now. I have some things to show you today that are monumental in regards to where AMD is moving, what's going to happen with the stock price from here, what's happening with the business fundamentals. We're going to talk about AMD all in depth at the beginning of this business. I have some things to show you in this one, okay? Then I want to spend a moment talking about Fubo. Fubo reported earnings yesterday. I know a lot of people wanted my 2 cents on what's going on with Fubo, so I thought I would throw that into this video here today. So we'll focus on AMD and then throw in a little Fubo here. And then there's 2 clips I gotta react to here on the reaction channel here today. Alex Karp, I only have seen a little small clip from this clip. Essentially, I saw it on X. I can't wait to react to this whole interview. And I was looking at the comments, and that made me even more excited to read this. Somebody said the interview is a clear sell signal. Bro had a meeting with some white powder before this interview. Oh gosh, like some of these are pretty done. Pretty darn funny, right? This guy really knows how to get off topic fast. An anti-woke pro-Coke company. Oh, this is going to be an interesting one to react to here today. And then Tom Lee went on CNBC yesterday talking about the S&P 500 going to 7,500, right? All of a sudden, people are getting shaken up in this market. They're seeing Bitcoin. They're seeing the risk on stocks. All of a sudden, selling off. They're like, whoa, what's going on here? Tom Lee says it's all going to be okay. Okay, so yeah, I got a lot to get into in this one here today. I hope you guys enjoy this one. I appreciate you joining me. This is busy season for me. Earnings season is like non-stop. I need some of whatever they give Carp. I appreciate you guys for joining me. One thing only I need from you, not the white stuff. I just need a thumbs up, okay? If you just give me a thumbs up, man, that's all the white powder I could ever use right there, okay? Just a little thumbs up action, that's all I need, okay? And additionally, if you want to be subscribed to the channel, you can certainly subscribe. We are now at, how many? Oh gosh, I think 117,000 subscribers here in the reaction channel, so appreciate each and every one of you for being here. My private group, that will be the pinned comment down there. If you're looking to apply to join us in there, we are now up to a shocking 2,826 members in there. I'm considering shutting it down at 3,000 members this year. So I haven't made a final decision on that, but I'm considering shutting it down at 3,000 members for this year and then opening it back up at some point in 2026. So if you want to join us in there before I shut that down, that will be the pinned comment down there. It's access to all my course curriculums, private Discord chat, AMD chat's been popping, obviously, and all that good stuff, okay? Plus exclusive videos from me, see the stocks I'm buying and selling each week, all that good stuff, okay? That'll be pinned comment down there to apply to join us. AMD. So what are my thoughts about the stock? Before we get into the business fundamentals, the monumental things that's changing for where AMD stock price is going over the next 2, 3, 4 years, let's just talk about the short term of the stock price. What do I think about the stock going down after hours? Here's the deal. If you look at all of risk assets right now, they're all trending lower. It doesn't matter what it is. And when I say recently, I'm really just talking about like the past week. The Nasdaq's down about 3% in the past week from its all-time highs. It hit about a week ago, right? If you look at NVIDIA stock, that's down quite a bit. AMD's off a bit from where it was at. Bitcoin, I mean, it seems like Bitcoin not that long ago was 120,000 plus, right? Bitcoin, last time I looked, was 99,000. So that's selling off. Bitcoin's always a phenomenal thing to look at in terms of, is the market wanting to go risk on or risk off? Usually if Bitcoin's moving up and up and up, then that's just usually a sign that people want to take more risk out there. Bitcoin continues to sell off. It's clearly a signal that people are like, you know what? I'm not quite as enthusiastic about buying right now. Right? So they're kind of laying off a bit. And so my thoughts in regards to stock is, based on these results and what I'm about to get into here, the stock should be up after hours. But it's hard to go up if you're in a risk off market, right? And look at 2022, that's a perfect example of that. That market, we watched the Nasdaq go down about 37% peak to trough, right? From that peak in 2021, Q4 2021, to the trough in Q4 2022. 37% down move for the Nasdaq. It didn't matter what you were doing in your business model. Everybody was going down. It didn't matter what stock it was. It could have been Coinbase. It could have been Robinhood. It could have been Meta, Google, Apple, Microsoft, NVIDIA, AMD. Everything went lower, right? Palantir went to $6. I think it was like $5.98 at the lows or whatever, right? Like people don't want to take risk. They just put on that selling pressure, right? And selling pressure can add to more selling pressure. That's just something to keep in mind there. And, you know, this is a message I gave to the private, or not the private group, I gave to the main channel today, I think on Eclipse channel, because I released that video, 4 stocks I'm buying, November 2025 edition. And then I did a little short, I guess it's called, for the main channel. And I was telling them, I see some people out there worried, scared about a 3% down move in the NASDAQ. And I said, man, if this is scaring you, if this is shaking you up, you better get ready, because this is nothing. 3% down in the NASDAQ put me to sleep. Like, get ready for 10% down the Nasdaq. Get ready for 20% down the Nasdaq. Get ready for 30 and 40 and 50% down for the Nasdaq. That will come down the road. Promise you. It always does, right? You think it's never going to happen? No, it always happens. I mean, just this year, look at just earlier this year it happened, right? Like we had Nasdaq move down about 20%. Quick. That's how it happens. And so just understand what you're seeing in front of you right now is nothing. This is easy peasy lemon squeezy. This is like you try out for football and it's the first day of practice and you do some conditioning and you're like, oh, this is too much, right? And some people tap out that first day and they never come back, right? Oh, I thought football was going to be fun. This is brutal. I got to do conditioning, right? They don't even make it to the hitting drills. Then you start the hitting drills, and you get a whole bunch more people to drop out. That happens in the stock market, right? It's all fun when you're signing up and you're getting your pads. Then you got to actually go to practice, put in the work. And in the stock market, the equivalent of that is when you start going through a downtrending market, whether it be for a few weeks, a few months, or a year, right? 2022 was a great one to go through in terms of, are you battle tested? You send the Nasdaq down 37%. You send many of the most popular stocks in the market down 50 to 80%. Now we're talking. And that was about a year downtrend there. Now that's big dog stuff, right? You can survive a year-long downtrend. 35% plus down in the Nasdaq, you can survive anything in the market, okay? Alrighty, that means you're built. So that's my opinion in regards to stock. Now, in regards to what's going on with the business model, there's some very fundamental things that are huge happening here with AMD, okay? First off, their guidance. So before we get into this last quarter, the guidance was very important. Here's why. We know Lisa Su likes to usually sandbag and put out numbers that she's confident the company's going to beat, right? She's got a lot of respect on Wall Street and from investors because they know if she puts a number out there, her and the team put a number out there, they're going to come in and beat that number, right? And like AMD's not going to come in and disappoint you and do a number way worse than they anticipated, right? Now, I said based on the guide, it looks like, in my opinion, they're going to do $10 to $11 billion next quarter because they're basically guiding for a midpoint of $9.6 billion. The top end of the range is 9.9. I think Lisa Su and the team is not going to put out a number on the highest number that basically they're going to be confident they're going to beat that number, in my opinion. So I think what they're actually going to come in with next quarter is somewhere between 10 and 11 billion dollars. That's my personal opinion, okay? And so I think they're going to come in and beat that highest end of the range, right? Somebody asked if one of the members of Private Stock Group, they said, they asked if I was going to record an AMD video. I said, it's about a 96% probability. I said, the 4% is YouTube goes down, Loom goes down, or I slip on my dang kids' toys and hit my head, right? Oh, gosh. No, another thing I was actually talking about in all seriousness here, I was talking about gross margins. And those continue to accelerate. I said those gross margins are up to 52% now, was 40% last quarter. My guess is those continue to roll up over the next 1 to 2 years as they launch higher end products out there, right? Now, in regards to the income statement of the company, guess what? A+. Banger, an absolute banger of a quarter for AMD here. Revenue, $9.2 billion from $6.8 billion. Unbelievable growth for the company. Cost of sales went to $4.2 billion from $3.1, but when your revenue's up that much, like the company's revenue is up like $2.5 billion year over year. So if your cost of sales on $2.5 billion of revenue up and your cost of sales is only up, let's call it just over $1 billion, yeah, you're looking pretty good there, right? Your gross margin is going to likely explode. So gross profit went to almost $4.8 billion from $3.4 billion. Gross margin went to 52% from the same quarter last year, 50%. And in the latest quarter was actually at 40%. So a massive acceleration in gross margin, literally just quarter over quarter. Like, listen, ladies and gentlemen, 12 percentage points of gross margin lift in just a sequential basis is unbelievable. Like that almost never happens with the company. You could do maybe like 12% on a year-over-year basis would be insane. But when we're talking about 12 full percentage points, 1,200 basis points of increase of gross margin on a sequential basis, flip my flapjacks. Oh my gosh, flip them right in the air, right? Research and development went up a bit for the company, but I actually kept that pretty in check, I thought. Marketing, G&A was up a bit for the company, but I thought they kept that pretty in check considering how much revenue was up for the company, right? So total operating expenses was up for the company, but for the numbers they're doing for this company, that's no problem at all, right? Now, net income went to $1.2 billion for the company versus $771 million in the same quarter last year. So I love it. Love it. If a company can have strong double-digit revenue growth, which obviously AMD is very, very strong double-digit revenue growth, right? And I love it if their margins are also increasing and their net income's increasing at even a faster clip than revenues. That's like the trifecta for me. That's the trifecta of beauty. Now, diluted EPS went to 75 cents from 47 cents. Unbelievable, man. Just a banger for a quarter. Just a banger for the quarter. Obviously, everybody's very, very happy about AMD in my private stock group, right? You know, the thing is, with my private stock group, like, everybody in there has the same mentality as me, right? Otherwise, you wouldn't join. Like, everybody has the same mentality as me. We're all focused on the long term. We're focused on the fundamentals of the companies. You know, if AMD stock was up or down 3% after hours, it's irrelevant. It all matters where AMD stock is going over the next 2, 3, 4, 5, 6, 7 years, right? Now, this is very important what I'm about to show you, everybody right here, okay? You want to always look at how is a company's business segments doing on basically a quarter-over-quarter basis. Are they accelerating growth? Are they decelerating growth? Okay, here's what we find with AMD. This matters so much if you want to know about AMD stock and what's actually going on underneath the hood. Okay, look at this. The data center business grew revenue 22% year over year to $4.3 billion. That's the raw number. Okay, if you look at last quarter, the data center segment did $3.2 billion. So they just grew that business $1.1 billion on a quarter-over-quarter basis, not a year-over-year, a quarter-over-quarter, which shows how heavy the 350 series is starting to matter, right? Additionally, revenue growth was up 14% on a year-over-year basis. They just accelerated that to 22%. That is unbelievable, okay? Operating income for the segment, $1.1 billion versus actually an operating loss in this same quarter last year. If you look at the client and gaming segment, they did $4 billion of revenue in this quarter. They just reported, okay? What did they do in this same quarter? The previous quarter, they did $3.2 billion. So that went to $4 billion from $3.2 billion. Growth rate was 14% here. I'm looking at that. I didn't update this one to the client segment. Client segment, $3.6 billion last quarter. This quarter, they just posted $4 billion. So that's another acceleration of $400 million of extra growth on the business on just a quarter-over-quarter basis. 73% revenue growth for client and gaming segment here versus 69% in the last quarter, essentially, right? That's phenomenal. And then if we look at embedded segment versus embedded segment, okay? So if we look at embedded segment for what they just reported, that business was down 8%. Now, you look at the quarter, the previous quarter, they were at down 4%. So you may say, oh boy, they were at 4% down. Now they went to 8% down. Look at the raw number though, because that matters even more so. $857 million they just did in embedded segment revenue versus $824 million to be exact in the previous quarter. So the fact is the raw number is actually increasing. I know the percentage looks worse, but actually that business has bottomed and it's actually picking up in regards to revenue. That matters so much. And that's where you got to really look under the hood deep into these numbers. And all of a sudden you realize, okay, so what do we have? What's the moral of the story here in regards to AMD and the numbers? Every business is strengthening. Every business line was up considerably, with obviously data center being the winner, chicken dinner. But the fact is, data center grew quarter over quarter, client and gaming segment grew quarter over quarter, and embedded segment grew quarter over quarter. So that matters significantly to this company, right? And so, I couldn't be more happy. The balance sheet's a banger. I mean, look at the balance sheet. Now, in this latest quarter they just reported, they are now up to $7.2 billion in cash equivalents, and short-term investments. Look at the accounts receivable. Accounts receivable now up to $6.2 billion from $5.1 billion. So cash and cash equivalents and short-term investments, just on a quarter-over-quarter basis, we're not talking year-over-year, just quarter-over-quarter, up 23%. Accounts receivable just on a quarter-over-quarter basis, up 21%. Right? And then look at total debt, flat. Beautiful. Is a beautiful, okay? So AMD's a banger here before we get into Fubo, Alex Karp, and Tom Lee. Just to leave it on AMD before we move on here, everything's going exactly the way I expected it to. And that's all I can ask for. What happens with the stock in the short term? I mean, if you tell me the S&P 500 goes down 10, 15% over the next 30 days, well, AMD's going down too. Like, you're not going to fight that, right? The question is, maybe AMD only goes down as much as the market, and when the market starts bouncing back, it comes back way stronger. That's something to keep in mind there. But that's going to be what that's going to be. The moral of the story is AMD is going at 300, and then you know where AMD is going? 400, and then when you know where AMD is going, 500 plus. Based upon everything I see in the numbers, remember, right now is the appetizer. We're at the appetizer stage for AMD. We haven't even gotten to the entree. The main course is coming. That starts in the second half of next year. And then 2027 is a blow-off top year for the company's revenues. So we're just at the appetizer stage, ladies and gentlemen. Okay? So if you think this is good, you ain't seen nothing yet. Okay? You ain't seen nothing yet, ladies and gentlemen. Okay? Fubo. So in regards to Fubo here, a D income statement, which actually is an improvement for them because they've had a lot of F grades over time, right? Overall, they cut down their losses in a substantial way, right? They haven't been spending, that aggressively on marketing for this company. Look at sales and marketing, they actually brought that down considerably year over year from 55 million to 42 million. And you might say, why? Well, the main reason I think they brought marketing and sales down is they really were trying to focus the business on profitability short term, because they just finally cleared that deal for Hulu Plus Live TV. So they're going to get millions and millions of new subscribers coming onto the whole company, which is like a massive quantity of growth there, right? So in the very, very short term, they don't really need to focus on attracting more members. 2026, especially the back half of 2026, they can start trying to figure out, okay, let's start attracting massive amounts of new members again and things like that, right? But in the short term, like you just did this deal, you're now becoming a giant in the space. You don't really need to just focus on profitability in the short term, then focus your attention back on marketing and spend as far as that goes. And now that Disney's going to be very involved, their marketing and their ads and all that stuff is going to end up being a lot better, and they'll get likely way better conversions than when they're by themselves, okay? So if you look at net loss from continued operations, that went to $18 million. That was $54 million in the same quarter last year. This was always like a big money losing quarter for the company because they usually spend a lot on marketing because getting ready for football season, right? And so Fubo is honestly looking like they could build into a profitable giant. Obviously, they'll have a bunch of one-time weird expenses over the next probably 6 to 12 months because of the deal going through, and there's a bunch of one-offs you have to have, and certain groups might have to be let go because you got duplicated roles and all that stuff, right? But the moral of the story is like Fubo's looking like they're about to build into a profitable beast. And then the question is going to be, how profitable is this company going to get? Okay, so everybody got used to thinking like Fubo is just going to lose money forever and ever. And like, no, they've been clearly showing a trend of getting things better. And the other big thing I thought with Fubo that I don't think a lot of people understand how impactful this is the advertising business has always been a huge underperformer in my personal opinion. I don't know why that is. Maybe Fubo had a bad team running the advertising, right? Maybe advertisers didn't respect Fubo because they were too small, right? I don't know what it was, but advertising always underperformed for Fubo. Listen, something big just happened. Now they're going to start using Disney for the advertising side. So they're going to be able to leverage the Disney assets for their ads, right? Which means they're going to have a lot more power, a lot more say with advertisers, and they're going to likely be able to generate a lot more money because now they're going to be going through a big dog. So that matters significantly, so that ads business should pick up by miles over this next, year or two. And so, remember, the ads business, that's where the real money's at. There's the subscription part of the business, which, I pay, I think Fubo, I get the highest end plan for Fubo. So I think I pay like $100 or $120 or something a month for Fubo, right? That's cool, and Fubo can make money there, but that's not where the big money's at. The big money's actually with the ads. That's where you can actually make big money because you get a certain amount of ad placements on programming. So I love it, man. I love it. And then obviously there's a YouTube fight with Disney going on right now, which could drive a lot more customers over to Hulu Plus Live TV. It could drive a lot more customers to Fubo. So that is what it is. And so Fubo, love it. I'm excited about that company. I think the stock's going to 5. Then I think it's going to 10. Then I think it's going to 20. And, it's a speculative hold I have, but it's getting less and less speculative as time ticks on, right? And they're still in the gulag right now. I mean, the stock, I'll be honest with you guys, that stock that stock should be out of the gulag right now. The fact that it's under $5 right now is a crime. That's the best way. It's a crime that stock's under $5. There's no reason, given how strong Fubo's balance sheet is, given now that they're tied in with Disney, and they got the Hulu Plus Live TV, and now they're going to be like a real player to now actually fight against YouTube TV and other competition. That company should not be under $5 right now. That's a crime. So take that for what it is. Yeah, I bought some Fubo stock in the last 24 to 48 hours. Let's just put it that way, okay? Alex Karp next up here, and then we'll get into Tom Lee.
CEO Alex, it is so good to see you this morning.
Cheers, ladies and
we
gentlemen.
had your biographer on the broadcast before, and we're speaking about you now in third person, but now we're doing it in first person. The earnings were a blowout, I think, across the board. We can talk about maybe why the stock market reacting the way it is.
I had a very in-depth video on Palantir. I posted that on the reaction channel here. So if you want my very in-depth thoughts focused around Palantir, check out the video I released here on the reaction channel yesterday. Okay, that was a banger if you're really into Palantir stock.
But, I was listening to the call yesterday, and I wanted to, just for those who didn't get an opportunity to hear it, I think you made some fascinating points about why you think this company and maybe even yourself are so misunderstood.
Well, there are lots of easy ways to misunderstand me. I misunderstand myself, and it's not like the super conventional playbook thing. Look, we're an anti-playbook company. If you want to do the personal version, I'm like this dyslexic, formerly and I believe currently still left of center, who actually sticks up for progressive values, which triggers TDS loving people, because I think the Democrats are no longer progressive. And then the company is built in a truly sui generis, unique way, which would only be possible in America, and actually explodes every assumption of how an expert would build a software business. The more you actually know about building software, the more odd, unique, and inexplicable our rise in success, and I would say domination on the enterprise software battlefield looks and is. And then I would say one of my main issues is Palantir, because we called a lot of things that are kind of establishment views that often are viewed as kind of being
This guy, he's like, that's Alex Karp. He's the only person that knows probably who Alex Karp is right there.
super woke into question in every single assumption of Palantir. The people who piled in to Palantir were people investing their own money, often people who are not in the investor class, non-experts. And even till today, the experts sit on the sideline and say, hey, this can't be true, while the average American who invested in Palantir, and for the first time, maybe arguably since World War II, average Americans got venture returns investing in Palantir. So you have this massive divide between the average.
All right, Mr. Karp, got to push back against you there, okay? Listen, Alex Karp's kind of saying like, oh, we're the only ones people made. No. Tesla's made retail investors life-changing money. Palantir, sure. Yes, absolutely, right? Meta's done the same. Apple's done the same. Microsoft's done the same. Google's done the same, right? Like, I could go down a long list of companies that have made investors life-changing money, right? You got even companies like Elf Cosmetics, obviously made me ridiculous sums of money, right? Celsius Beverage, Monster Beverage. Monster Beverage, one of the best returning stocks in the entire stock market. If you look at, basically 2000 returns to 2020 returns, like that 20-year span, one of the best returning stocks you could ever find. There's a long list of stocks that got retail investors rich, right? Palantir's one of those. Nvidia's another one, right? AMD's another one. Like, there's people that were loading up on AMD at $1, $2, $3, $4 years ago, 10 years ago. 10 years ago, AMD was like a $2 chuck. It was a $2 stock, right? And obviously, if you rode that wave to 200 plus now, like, you've made life-changing money. So Palantir absolutely deserves its credit for making a lot of people a lot of money, but to push back against Alex Karp, let's not act like you're the only one. Like, there's been plenty of stocks, and there'll be plenty of stocks over the next 5, 10, 15 years that will make people life-changing money that, they'll look back and be like, I cannot believe my portfolio says this amount of money.
Person who evaluated themselves and the expert class that still was working on assumptions that have historically not been true, that obviously, if you look at the earnings, if you actually look at, we grew the company, I'll go through if you want to go through the numbers, but extraordinary results, yep. And then the expert class is weak need, and the retail people are all in. So, in fairness...
But that's what I wanted to ask you about. In terms of because there is a misunderstanding. Clearly, you look at the analysts, most analysts, think that this stock is overpriced. You have people like Michael Burry out there shorting it. Everybody who's shorted this stock thus far has been on the losing end of it. And I'm trying to understand, just if you look at sort of the growth trajectory, the sales, how much of the sales, frankly, I think actually even there was a huge part coming from even existing customers, and just what the scale of this thing ultimately looks like in your mind.
Okay, there are two parts. Of course, when I hear short sellers attacking what I believe is clearly the most important software company in America, and therefore in the world in terms of our impact, simply to make money, and trying to call the AI revolution into question, where we have this anomalous numbers, 114, rule of 40, et cetera. It just is super triggering, because these people, they could pick on any company in the world. They have to pick on the one that actually helps people, that actually has made money for the average person, that is actually supporting our warfighters. Why do they have to go after us? And I'll tell you what, it's crazy motivating, because I'll tell you why the short sellers are constantly getting screwed by Palantir. Because every time they short us, we just are like tripling down on getting the better numbers, and part, honestly, to make them poorer. But okay, so the question of the actual power of the business and what is it worth? I mean,
in all due respect, Alex Karp, okay, listen. I wish I could talk to Alex Karp, because he actually stressing. He's stressing over this, short sellers betting against stock and these sorts of things. The man's stressed about this, right? It's like super trigger. Listen, success is going to bring a level of hatred. It's going to bring a level of envy and jealousy and those sorts of things. That's what happens, right? Even myself, I'm not some super famous person, but I have a lot of people that watch my channel. You think everybody that watches my channel likes me? No. If a video of mine if 100,000 people watch this video, guarantee you at least 1,000 people don't like me. They actually hate me. They talk trash about me. That's just what it is. You think every musician, you think everybody likes Taylor Swift? No, okay? You think everybody likes Tom Brady? No, okay? Anybody that's got a level of success, you're going to attract some negativity. You're going to attract haters. You're going to attract people that don't like you. And that's fine. But don't stress about it. That's what you signed up for. You understand? You sign up to be super successful, to have a lot of money, to have a successful company, do anything big in this world. You're going to have a certain amount of people that don't like you and want to see your company fail or whatever, right? And short sellers, that's not most short sellers they're not betting that Palantir is going to zero, the company goes bankrupt. They're betting that Palantir is going to go down 50% or something like that, right? It's going to be a short-term big move down for the stock. They're not betting that Palantir is going bankrupt. Man is stressed about this, stressed. And if I could just talk to him, I'd be like, dude, chill. Chill. They're not betting your company's going to zero. They're not betting that you're going to go bankrupt and you're going to be, begging for change on the side of the road. You know what I mean? And Palantir, to take it one step further, a lot of people don't like Palantir's products. They feel like Palantir's military-related products are not good. Let's just put it that way. And when I say not good, I mean they're too good for the battlefield, as in they cause death. I don't know what other way to put it. So they don't actually like Palantir the company because its products could be very, very deadly on the battlefield. And so that dude, chill. You're gonna have some haters. There's no doubt about that. That just is what it is. Your company's gonna have some haters. Get used to it.
Today, one of the things that is actually in the book, the biography, and that I actually think you always have to ask is the person persuasive or are they right? And across all sorts of movements, political, you see this on the regressive part of the Democratic Party. We're about to probably have a complete disaster. I was born in New York. But if you actually said...
Oh, yeah, and then the man, crapping on the Democratic Party. Okay, you want more enemies? You know what I mean? This is the second time he's brought up Democrats in a negative light. Second time. This has been a 4-minute clip. He's brought up Democrats in a negative light twice now. Twice. And you wonder why some people don't like come on, dude. What planet are you living on?
These things actually work. Everyone's of course I'm not going to vote for that. But instead they ask, does it work in theory? The theoreticians, you have to ask, how often have you been right? And Palantir is about pragmatic decisions that create unfair advantages for America and its allies. And on that, we've been right for almost 20 years on all major decisions, and I believe we'll be right going forward. Now, you could argue, I don't know, like they're constantly like, but they thought Palantir was overvalued at 10. They thought it was overvalued at 20.
That's fair.
I'm not even here saying what the valuation is. I'm just saying find a company in the world that has a rule of 114, that has U.S. commercial growing at 121%,
Fair.
that aggregate growth in the U.S. is 77%, that has throwing off free cash flow in a way that's anomalous, and that is fully aligned with our customers. And you figure out the value, but they're in the business of being skeptical and being wrong, and we're in the business of giving an unfair advantage to American workers, American warfighters, and our investors.
Being short is a very difficult place to be because you can lose.
Yeah, and also to be fair, this I got to stick up for Alex Karp in this big respect. Okay, listen, a lot of times CEOs are asked about the valuations of their companies, right? Listen, just because you're a CEO of a company, you started a company, does not mean you know how to properly value companies. That's not how this works. I would say 99% of CEOs and CFOs do not properly know how to value a company. Have no clue. Why do you think every company, when they actually go to acquire another company, they hire professionals to assess the assets and if this business is worth this, right? If they knew how to do that themselves, they wouldn't go pay tens of millions of dollars of fees or hundreds of millions of dollars of fees to investment banks to then go assess, is this company that we're going to buy, this new software, blah, 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 is it worth it? And so Alex Karp doesn't spend his time running valuations. So he doesn't actually know if his company's overvalued or undervalued. He's a CEO and he's, founder, so he's going to always assume his company's undervalued, if anything, right? We're going to grow forever and all these sorts of things. And that's every like I said, 99% of CEOs, they don't know how to value companies. That's a whole skill set you have to bring up, right? No different than if you plugged me into Palantir, I wouldn't know how to run that business today. Why? Because I haven't built up the skill set to go run Palantir. If they wanted to have Alex Karp and me switch roles right now, Alex Karp's going to have no clue to do what I'm doing. And I'm going to have no clue to do what Alex Karp's doing. Because you know why? He hasn't focused the last 17 years on running valuations on companies or trying to figure out if an asset's undervalued or overvalued. And I haven't spent the last 17 years trying to run his business. You know what I mean? We both fail. And so, it's just crazy. But they ask these CEOs, the valuation of your company, thinking they're going to know, they're just going to talk up their stock. Yeah, we're doing all this stuff. We're growing. I don't know, valuations. Come on, man. Come on.
You can drive these people into the ground.
Thank God.
Like Michael Burry put a really big bet on it. It's almost $1 billion. It's $912 million. That's a big step for him to put into that. When you say you redouble your efforts, what do you do? What do you go back in?
Well, first of all, he's actually putting a short on AI. So the way I read it was us and NVIDIA, and it's he's
the biggest position is you, though.
Yeah,
I'm just through all of his shorts.
Great. Okay. So, and then, by the way, with the shorts, it's very complex. It's not even clear that, honestly, I think what is going on here is market manipulation. We delivered the best results anyone's ever seen.
Stop it, Alex Karp. Market manipulation. Stop it. You got almost a $500 billion market cap. Oh, gosh.
It's not even clear he's not doing this to get out of his position. I mean, these people, they claim to be ethical, but, they're actually shorting one of the great businesses of the world. And I'm not against shorting as a matter of theory, but I'm just saying pick something that is not doing a noble task. And, it's us against them, and that's a good position for us.
But to be fair, once again, Alex Karp, you view your company as a noble company, but a lot of people do not. A lot of people do not. You have to acknowledge that.
When you're printing a rule of 114, again, people who aren't technical, I think roughly an incredible score, an Olympic grade score on rule of 14 is 50. I mean, that's roughly if you're between 50 and 7, you're an Olympic athlete,
He's right.
A unique implement athlete. This is Michael Phelps score.
Yep.
Michael 100%. Jordan. There are no scores like this.
He's 100% on in regards to that. I mean, they're putting up numbers you just never seen before. This is ridiculous. Yes, 100% he's right.
And 121 growth
Legendary.
Off of almost a 1.5 run rate in U.S. commercial, and a 77% growth in the U.S., and an aggregate off of an aggregate base of $4.5 billion. By the way, I predicted we'd get here. So, it's if you want to short that, be my guest. You go ahead. We're just going to go do our things. I mean, look, I'll tell you, there's a tale of two cities in our society. We need experts versus retail. And you see it I don't know why these newspapers are helping Mandani win. I don't know why we can't have honest discussions about our future. I don't know why we have to allow fentanyl attack, but it's almost always sympathy for the expert that doesn't need it, the short seller that has some ridiculous reason for doing something against. Most of GDP growth in this country is because of AI. The real question is, how do we grow that and expose workers? What is the worker available GDP? That's the question for our society. Instead of aligning on that, we've got these completely. And again, if the numbers weren't there, great, be my guest. But then the numbers are there. So then you're not. It's not even clear he's actually shorting us. It's probably just, how do I get my position out and not look like a fool? I don't know.
Okay, got to push back against Alex Karp here. He's just this ultra level of disgust and hatred of short sellers and whatnot, right? Listen, if Michael Burry is right and Palantir stock goes down a bunch, and Michael Burry makes $500 million in Palantir, how does it negatively affect Alex Karp and Palantir? Zero. Does nothing. Just because if Michael Burry bets against Palantir stock, makes a bunch of money, it doesn't negatively affect anything. Okay, cool. No different than if Palantir stock goes to 400 and Alex Karp gets a bunch richer. Does that massively negatively affect anybody else? No. That's just looking at the world from a very false, and it's surprising Alex Karp will look at the world in a false tense, but he is. He absolutely is. He's looking at the world no different than somebody looks at a billionaire and says, how could they have all that money? They must be so greedy, that's ridiculous. No one should have that much money, right? And this false notion about they won, so I lost. Right? Because they're a billionaire, that means society lost. We lost that money today. No, that's not how it works. No different than if Michael Burry makes a bunch of money on the stock going down and sells out in 3, 6, 9 months from now. It does nothing. It doesn't change anything with Palantir, their business model, Alex Karp. It doesn't even affect you. But it affects Alex Karp. He's stressing about this. Crazy, man.
But I do think this behavior is egregious, and I'm going to be dancing around when it's proven wrong.
Right. Alex, we've heard a lot of talk from the likes of a Michael Burry, but more broadly about whether we're in an AI bubble, whether the economics make sense. Clearly, in the context of Palantir, they do make sense insofar as you're printing money over there. Not everybody in the AI space is printing money in the same way, and they're spending an enormous amount on chips, data centers, and the like. How do you see the broader space right now?
Alex Karp needs to chill, man. He's going back and forth in his chair. Last time I saw somebody going back and forth, you guys ever seen the video of the guy with a last name that began with H back in the 1940s? You guys remember him? You ever seen him? I think there's a video of him at the Olympics, and he keeps going back and forth, and they're said he was on some stuff. Let's just call it that. Alex Karp's freaking me out here, man, going up and back and forth, back and forth, back and forth. Oh my gosh, chill,
They
Karp.
do make sense insofar as you're printing money over there. Not everybody in the AI space is printing money in the same way, and they're spending an enormous amount on chips, data centers, and the like. How do you see the broader space right now in terms of just how things are developing?
There are two subtle issues in AI. What is the addressable market, and what is the addressable market for things that work? Meaning you make more money and the quality of money is higher. So top line and bottom line grow. Palantir, we're in the business of a part of the addressable market where it works and it can be quantifiable, either commercially or on the battlefield. So clearly, and over time, you're going to have Pareto optimality, meaning that every part of the stack is going to have to create more value than they charge. That's just obvious. And if that doesn't happen, it will be a bubble. And, I'm sorry, short sellers can't tell the difference between products that work and products that don't, but these numbers should show you that there's a part of the market that, to you, quote you, is printing cash, and it looks like that part of the market is the part we own. There's a separate question, by the way, which I think is equally relevant. What part of the GDP growth is available for workers? What we call worker available GDP. And that's one of the unique things about Palantir is whether it's on the battlefield, the people writing the scripts for these very complicated operations, or building batteries or doing things on the factory floor are being enhanced by our product. And those two questions are going to define arguably the future of what happens in this country. Does GDP grow because of AI, which only can happen if there's Pareto optimality, or and the way we see it, the customer pays less than the value they create, which is abnormal not exactly equal Pareto optimality. And that, it's unknown, honestly. You have this massive growth, but currently, as far as I can tell, the two companies he's shorting are the ones making all the money, which is super weird. Like, the idea that chips and ontology is what you want to short is batshit crazy.
Okay, so first off, let me expand on this point, and then I'll tell you Michael Burry's bet against Palantir and why it's a little different than how Alex Karp's talking about there, right? So, Cheesecake Factory, obviously a stock I love. I think that might have been one of the 4 stocks I spoke about on 4 Stocks I'm Buying November 2025 edition that came out on the main channel this morning, right? So, let's say I'm buying cake at 47 right now, okay? And somebody is shorting the stock and cake goes down to 40 and they make a bunch of money and cover. Okay. How's that negatively affect me? It doesn't. It doesn't mean a dang thing for me. Good for them. Maybe they could buy some cake shares at 40 now. Good for them. It means nothing to me. Absolutely nothing. And so, I wish Karp could understand this point about dude, if somebody shorts your stock and happens to make money, it doesn't negatively affect you. Michael Burry's bet, I believe, is on, he likely thinks Palantir is close to deceleration of growth, which obviously I've been talking about for some time now, right? And obviously it has a sky high valuation. So if you can start to get a deceleration of growth, let's say growth rates have peaked, that rule of 40, that's 114 right now for Palantir is ridiculous. Maybe that's a peak. Maybe next quarter goes down to 110, 109, right? Still amazing, but you're starting to have a deceleration. And when you throw a sky high valuation that's at insane price to sales ratios of trailing 12-month Ps, forward Ps, 2-year forward Ps, whatever you want to look at for Palantir, it's all sky high. When you have decelerations of growth with sky high multiple, that's when you can get a nice move, pretty substantial move down in a stock for a 3 to 6 month span, right? Where Palantir could go from 200 something down to 150, 125, which could be a very, very profitable move in a 3, 6, or 9 month span. So now there's a risk of you not being right about that, and let's say rule of 40 goes to rule 120 next quarter or 125, you don't know, right? But if he can get his timing right, there could be a lot of money to be made in that move, and it doesn't negatively affect Palantir or Alex Karp in any way. So he needs to chill. Tom Lee.
The last couple of appearances, whenever you're, actually it's been a while now, when you're on, I kind of hold my breath after some of your forecasts, because a lot of times I think no way, and then it's always seemed you have not been really wrong yet in any significant way. You ever have any trepidation, second?
Hold your horses for just a moment. Listen. As somebody that's been watching Tom Lee clips for a long time, and as somebody that's had the reaction channel since 2022, plenty of times Tom Lee's been wrong. Let's not act like Tom Lee's never been wrong. Same thing, I've been wrong. Everybody's been wrong in this game, right? Now you want to be right a lot more than you're wrong. But the moral of the story is everybody's wrong, and Tom Lee has been wrong. I remember it was a year or two ago, he was talking about small cap, 50% rise. That ain't never happened, okay? I remember in 2022, the man was still really bullish, and obviously the market got slaughtered, right? And there's other examples as well, as far as some Bitcoin calls he made about it's going to this price and that price, and it didn't actually happen. So Tom Lee's been right, but remember, this man's directionally a bull, right? When you're in a 3-year bull market like we've been in, he's going to be right a lot more than he's wrong. So just something to kind of keep in mind there, right? No different than a bear looks right a lot more than they're wrong when you're in a bear market. But don't act like they're right 100% of the time.
So do you ever get nervous about any of your calls?
Yeah, all the time, filled with doubts because, the future.
No one can be right off your 51%. You're the best ever in this business. You're still bullish, even though you talked about last week, a little wobble in some stocks. Sell on the news because of China. It looks like a little bit of hawkishness out of Jay Powell. I don't know if that lasts.
Yeah, that's right. I think the market has a lot of walls of worry because we've got the shutdown, we've got China, we got the Fed speak, but the market's been up 6 months in a row now. Only 6 times since 1928 that's happened. So if you look at November, we're up 5 or 6 times. And in 1942, it was flat. So basically, November should be really strong. I think at least 200 points on the S&P. So maybe...
For November?
Yeah, maybe even 250. So maybe we get to 71.
See, that's a call that I just wish you wouldn't make a call like that, right?
Well,
Mike?
You could
250
to 3% if that makes you feel better.
It does make me feel a little bit better because 250 points to say in November, 250 points. You're giving a time and a size.
But maybe we wobble the first couple weeks just to digest all the gains.
Yeah, that's what I saw in your notes. So initially there could be some choppy trading at this point. What's driving everything? There's still, I guess, sentiment is not positive, is it? You mentioned the wall of worry.
Yeah, I mean, if you look at it like AAII, the average sentiment this year is still minus 11.5, like net solidly bearish. That's only happened 3 other times in 35 years, all in the middle of bear markets. So investors feel like it's a bear market, but we're up 17%, which kind of tells me I think there's a big performance chase into year end. You know, over 80% of fund managers are missing their benchmark this year.
Wow. And you don't care about not having government data because does the market ever really wait for government data? Or it sort of sniffs it out, doesn't it?
Yeah.
The all-knowing market.
That's right, because, you know, we have good Fed futures to look at what's implied for inflation. You know, the Fed looks at the bond market. The bond market figures things out before the data comes out. I do think the inflation is probably falling a lot faster than everyone expects. I mean, you can look at truflation, and we're down to sub 2% inflation, excluding housing.
Shelter, yeah.
Yeah, and shelter is finally cracked.
Yeah. Because that CPI number was, it was just barely cooler than expected, wasn't it?
Yes, but...
Okay, so before we go further here, and gets on to other subjects, talking about 7,100. S&P 500, 7,100. End of November. What are my thoughts about that? I think it's a pie in the sky. Pie in the sky. Ridiculously bullish statement. Unless we can get the government shutdown to end very short term here. If the government shutdown keeps rolling all the way to Thanksgiving, I don't think there's any chance we reach 7,100 on the S&P 500 by the end of November. I don't think it's even remotely close to happening. If you get the government shutdown to come to a close in the next few days, there's an argument to be made maybe that could happen because that could add like a new bullish catalyst. People start feeling bulled up again. Okay, the government shuts down, over. You take that out. But the longer this government shutdown goes, I think it's starting to actually get people really scared. At first, they weren't scared. Wall Street was not concerned about this. Wall Street thought there was going to be no shutdown. And then they said, well, if there's a shutdown, it's going to be really quick. Now we're on the longest government shutdown in history? So now people are like, oh crap, we were wrong about it being a shutdown. And who's the guy that called this whole thing? I called this whole thing. I'm like, how do these Wall Streeters not see this? This is going to be the longest government shutdown ever. I'm like, neither side's going to be incentivized. And I said, the side that will end up giving in the end, it's going to end up being Trump. And I said, the only way Trump's going to give in is once the stock market starts getting hit hard. Once the market starts getting hit hard, they'll put the pressure on Trump to then fold back and be like, okay, let's give them their way here. The market still hasn't been hit hard enough. The market has to get hit a lot harder. Once the market gets hit a lot harder, that's when Trump's going to go ahead and capitulate on this whole situation and flip to the other side, right? And say, okay, let's get a deal done. But until that happens, he's going to stand strong. He cares a lot about the stock market. Did you see the 60 Minutes interview? He brought the stock market up, and we're at all-time highs. We're doing amazing. He brought that up several times in that 60 Minutes interview. He's watching the market on like a day-by-day basis right now. So you start to really get this market hit, Trump will start paying attention. He'll capitulate. Until that, the Dems aren't going to move. Like, why would they move right now? They wouldn't. It doesn't make sense for them to move right now. And for T-Man, market's only down 3%, 2%, whatever. Nothing. Send it down also 10%. That's the moment, right? Remember, as far as the whole Liberation Day and all that stuff, we didn't see the backtracking really until the market got hit hard. And then once the market got hit hard, then all of a sudden it was, this and that and this and that, right? So that's a whole game to play out here. And so the moral of the story is 7,100 is a complete drain unless the government shutdown comes to a close really rapidly here. But if that one rolls on all the way to Thanksgiving, nope.
The shelter piece is now at 0.16 month over month. That's at 2% year over year. That level would bring core inflation down sharply. And over 54% of the CPI components are now deflating. It's the highest percentage since COVID started.
It seems, Tom, that the markets have, largely because of what you're describing, moved on from the inflation watch.
Yeah.
They've kind of put that aside as maybe the forefront risk. And much like the Fed has been dragged to doing, wondering about downside risk to growth. I mean, if you just look at things like the reaction of home builder stocks, consumer cyclicals, regional banks, just to that hawkish cut by Powell last week, it seems like it's not hard to get the market a little bit uneasy about, just exactly what kind of a soft patch this is, even if we have confidence that maybe it firms up into next year. So how does that play into the overall action in the index and what you expect from the market?
Yeah, I think there is something the market's trying to figure out, which is AI is consuming jobs, but that's turning it into profits for corporates. So profits are expanding. And then we have profit margins have actually been going up in the middle of tariffs. So how are companies able to take 70% of the tariff hit, but margins are going up? So there must be a productivity boom somewhere. And then we have, like you said, $7 trillion of cash on the sidelines, but we have high rates. And so the Fed, I kind of think, is trying to not overheat the economy, but we know...
there's another card at play. Okay, listen. You want to get a deal done? You want to see the government do a deal like snap of fingers? You want to see capitulation? Have the TSA workers start to go on strike and just not show up to work. And so all of a sudden air travel shut down. If that was to happen, boom. Oh, suddenly government is back open. Okay, if it gets to that point and TSA workers all just go on a strike and say, we're not showing up, you want to see capitulation? Imagine how embarrassing it was. You're the president of the United States and you don't even have air travel going on in your country. It's completely shut down. At that point, you have no choice. You have to capitulate, right? It's just ridiculous. So that's the other card at play. One's the stock market, the other shut down air travel around the country. Oh, man. And that's devastating effects to the economy, obviously.
Just point out, housing's in big trouble. So I would say it makes sense if inflation's in a good place and jobs aren't really strengthening for cuts to happen, and that would be really dovish. So I think that sort of comes together before the end of the year.
Andrew.
Hey, Tom. Have you been reading all these stories that just been out recently here about how the Fed is doing all of this sort of repo activity, like a lot of repo activity. And I just wonder what that really means for both the markets and maybe even for crypto. This is a ton of money. It looks like something like $30 billion just to ease liquidity concerns. This is, past couple of days kind of thing.
It is pretty typical into month end, right? That's what we are seeing. And I think that some of these numbers are also being distorted because of the government shutdown. So we know that the Treasury reserves are building because there aren't any payments being made. So it is something we're watching. But if I was to say that there's signs of bank stress, I'd also be looking for high yield spreads to be widening. And those are actually staying pretty calm.
So you figure no problem with 7,000 by the end of the year, more likely something even above that in your view? Like what? Like 7,300?
Yeah, maybe 7,300, 7,500.
7,500.
Yeah, so we still, in December, we would build on those November gains.
See, Santoli's like, no way.
No, I don't say no way. I'm open-minded to how far bull markets can go, right? Strong years end strong. We all know about that. The one piece of it I think it's worth kind of struggling with a little bit, though, Tom, is you can look at the AAI surveys, kind of what people are saying, and then you see, equity exposures in, Bank of America private client accounts are basically at their highs, right? So people have kind of, in aggregate, been riding this to some degree. And then you see a lot of what we've talked about in the last several months of, this kind of upwelling of speculative action in non-profitable tech stocks, low-quality equities leading. That's not the Mag 7. That's like a lot of other marginal stuff. So how do you jibe that with that sense that people are still skeptical?
One, we know there must be skepticism because if people were bullish, the institutional fund managers should have better performance. But as you know, this is one of the worst years for fund managers in almost 30 years. I think that there is also kind of problems in private markets. So I think private credit is doing terribly. And I think a lot of LPs in alternative funds, whether it's venture or private equity, are pretty disappointed by the returns, like the 5 years into now. But the stock market's done well. So I think that there is bearishness because private equity hasn't come through and fund managers are doing badly. But you're right. The ones who stuck with public stocks are are doing well.
I want you to quit while you're ahead, but I have to ask you about Bitcoin. I mean, you want to go out on a limb there too? Because it looks weak again today, 107. Go below 100 or no?
Well, Bitcoin, I mean, if I look at everything since October 10th, because that was the biggest liquidation in the history of crypto, like bigger than FTX.
Like a margin call almost.
Yeah, it was like almost a miniature rupture, like a tsunami. We're only a couple weeks from that, so I think the market is consolidating. But if I look at fundamentals, like Ethereum, stablecoin volumes have been exploding, application revenues at all-time highs. So right now, fundamentals are leading price in crypto. So I think eventually we consolidate and then we rally into year end.
To 150?
Yeah, I think we can still get to 150, 200 for Bitcoin, and then something like 7,000 for Ethereum.
Join us now.
150 to 200,000 Bitcoin by year end. What a call, right? What do we got BTC at right now? 101. Yeah, that's a big call. Big call, Tom Lee. So we'll see what happens with that, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Pin comment down there if you're looking to apply, join private stock group, private wealth group, get access to all my course curriculums, private Discord chat, all that good stuff that will be linked down there. So, oh boy, it's going crazy in there. All right, guys, much love and have a great day.